Post the financial crisis of late 2008, 2009, I think that people's risk appetite changed, and so people are looking for more proof points, and they're looking for more track record, and they're looking for more evidence of success, I think, before the capital really flows. USAID has had a long history of successful programs like the Development Innovation Ventures, and they've now started something called the Global Development Innovation Ventures, which is providing risk capital to very early stage, highly risky, unproven, and yet, very high potential companies and initiatives. We need more money like that to come to our space to take risk, because one of the bottlenecks that we're finding as investors in this space is the number of companies that we can invest in that have been de-risked somewhat, so that there's a better predictability in terms of their outcomes, both their impact and their financial return perspectives. And taking some risk is something the government can do. It already does, but we need a little bit more flexibility. One of the roles that government has also played is to provide a layer underneath commercial capital to de-risk projects. So the government has different agencies. Again, USAID has a guarantee program that will enable investors to come in, invest in projects where some of the failure that may be encountered will be borne by the U.S. government. It does this very well in the domestic U.S. context. We feel that this should also be done more in the international context. I came from the venture capital and private equity industry, and what not a lot of people know is that the venture capital industry was really given a big boost about 30, 40 years ago when the definitions changed through ERISA of the prudent man. And there was a move that was very clearly made by the U.S. government to define where investments should go, and the fact that they could go into venture capital. And I think we need a similar kind of directive to occur in the impact space to actually push investment money into impact investing. Right now, a lot of investors are afraid of impact investing because they feel like they are sacrificing financial return and they're not being a good fiduciary or a good steward of the capital that they are managing by taking a look at impact investments. However, if we have a broader definition, or if ERISA were to pay particular attention to what impact investing is and that it could be a good thing, that would move more capital into the space.